Hey everybody, Boris. Welcome to the crosses section for Sep 19th to Sep 23rd of 2016. A very interesting week coming up, of course, because we have a whole bunch of central bank meetings this week. It's really central bank week. We have Fed, we have RB&Z, we have the minutes from the RBA, and of course we have the BOJ. So there's just a tremendous amount of two-way traffic, I think, across the, all of the pairs, and it is going to express itself in some very interesting ways. The first idea is kind of very unconventional because one of the things that we had last week was a short on the Aussie Kiwi, which did not work, even though the news was actually very negative on the Australian employment data. And to me, when you have negative news, positive price action, it's a glaring technical signal for us to reconsider the position the other way. And when you look at the charts, as I'll show you in just about a second, Aussie Kiwi now sets itself up as a very interesting long, which suggests possibly that maybe RB&Z is going to be more dovish than the market expects, or simply the market was just take whatever the RB&Z says in a highly dovish manner. Either way, I think there's a potential here for us to maybe move to 104s, and I really like the Aussie Kiwi to the upside now that it kind of failed to move down to the downside as it tried last week. The other idea that's sort of interesting, and again, this is a hard idea to kind of execute at this point because it looks so ugly, is actually the EuroCAD to the long side. EuroCAD to the long side right now doesn't look very good technically, but it is coming into this very key support. And my thesis here is I think the Fed is going to punt. If the Fed punts, that puts the euro back into play to the upside. The euro's gotten sort of shellacked in the idea that possibly U.S. yields and the U.S. dollar is going to get stronger as the Fed creates a more hawkish message. If they step off the gas and do not provide the kind of hawkishness the market is looking for, it really provides a move stronger in the euro as a reactionary move. And at the same time, I don't think it provides any kind of a support to oil. Oil still remains relatively under the water, and therefore dollar CAD really is not going to react as strongly as the euro will. So I think there's just simply a really good risk-reward ratio here in that particular trade. But the last trade of all, the one that I really like the most, is actually pound yen to the downside. And the reason why is, of course, because pound just collapsed on Friday as market began to realize that Brexit is starting to come back to haunt UK. But we also have, if you sort of take this idea that no, the Fed isn't going to do anything substantial, and whatever the BOJ does is going to be minuscule relative to what the expectations are, it sets up a massive move to the downside on the yen crosses. And there's nothing weaker on the yen crosses than the pound yen right now. So aligning that way could potentially be a very interesting trade. Let's just take a look at the support resistance numbers and just see where we stand. So with Aussie Kiwi, 102 now is the pretty strong support. We weren't able to break that. 104 still to the upside, but that could potentially go this week, which is why I like positioning to the long side on the Aussie Kiwi. EuroCAD is coming into the support area of 147. Granted, it's the most problematic of all the ideas I have here, but if it kind of holds around this level, it gives us a chance to re-rally back up to 149. And pound yen, very wide range. No surprise, pound yen is a very volatile trade. But really, it doesn't break resistance until 140. On the other hand, it can go all the way down to 130. And in fact, I think if yen crosses collapse, it could just go even further to the downside. It's one of those, to me, it's the fastest accelerant to the downside if things don't quite work out to the dollar side. I like this to the short side the most. So let's take a look at the charts here and just see how they set up. Well, let's just start with the first one, the Aussie Kiwi. So Aussie Kiwi, you see how, despite the fact that we had very negative Aussie numbers, did not set up fresh lows. It actually made a nice curve back to the upside, and that suggests to me that maybe all the selling is done. So I really like this to the upside, and I like with the potential maybe that it could squeeze higher all the way up to the 104s. This is just one of those typical bad news, good price action. Always follow the price action when it doesn't jive with the news trades, and I think it's one of those plays that hopefully will work out. EuroCAD, on the other hand, here's the failure at around 149. No surprise though, but we did break above this 148 resistance level, and so the correction in here to me is more corrective than it is a failure, and therefore I don't mind trying to take a punt here and get long with maybe like a 46.50 stop, somewhere around there. Not too much of a stop. It's really if this is going to hold, it's going to hold around these levels and try to re-rally back up to those highs at 149. And then last but not least, here's the pound yen idea. Here we go. That to me looks the most the most momentum like. In other words, here's a trade that all the way up to certainly 135 is a shortening kind of a rally. But I don't even think you're gonna be able to get much of a rally here in the beginning of the week. And I think the acceleration down to the 130s could be very, very quick. Having said this, though, 130 is very key support here. So you would need some very bad news on all fronts to break it. But if it does break, we can go to 125 in a jiffy. This is one of those kind of trades that looks like it could just blow through support like a bullet train if the things align as I think they might, which is negative yen, negative pound, double accelerant to the downside. That's the idea for the week. I wish you guys the best of luck, the best of trading. Boris Schlossberg, over and out.